This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is November 1st, 2018, and this week we'll be looking at the best growth stock to buy right now. On our opening slide, it's called the Setup, the Approach, and the purpose of this podcast is to present to you a high probability upside potential stock. The key tool we use in finding such a stock is a financial model that we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but simply based on the best investment opportunity we can find. Easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Our approach didn't come overnight. We painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of our own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, our model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. A point worth remembering is that these views are based on today. An unforeseen economic report, a regional conflict, or revised policy can change these expectations tomorrow. And now, so what did our financial model find for you this week? Well, it turns out that the best growth stock to buy right now, we found it to be in the electric equipment industry. Here's the industry overview slide. The companies in the electric equipment industry includes businesses that serve various segments of the supply chain. Firms in this group are varied and consist of manufacturers that produce components utilized in a finished product. Other businesses make completed items. Products and services include electric motors, lighting fixtures, air conditioning and heating systems, and electrical power equipment. Now, here are 10 largest competitors by market cap, just to kind of level set and set expectation. Here we go. Emerson Electric, W.W. Grainger, Hubbell Incorporated, Rockwell Automation, Acuity Brands, Belden Incorporated, Franklin Electric, Fluor Systems Incorporated, Corning Incorporated, and Garmin Limited. Some of the growth drivers in the industry right now are strong global GDP growth. Some of the industry challenges at the moment in the electric equipment industry. Generally, since it's a capital-intensive industry, it requires close cost monitoring. There are some expected slowdowns due to tariffs. There's also a slowdown in non-residential construction, which has impact. And also the industry is challenged with keeping up with rapidly changes and in-demand technologies. Now for the big reveal. The best growth stock to buy right now is a company we found to be the best growth stock to buy right now is a company called Acuity Brands Incorporated. Their ticker symbol is AYI, and we see their 6-month upside potential at greater than 50%. On to the quick facts slide. Acuity Brands Incorporated is engaged in the lighting equipment business. The company owns and operates Acuity Brands Lighting, which is one of the world's largest lighting fixture manufacturers, and its products include a full range of indoor and outdoor lighting for commercial and residential applications. The company has operations throughout North America and Europe. The website is www.acuitybrands.com. That's ACUITY brands.com. The company is headquartered in Atlanta, Georgia. It was founded in 2001, and they have 13,000 employees. On to the metrics slide. Over the last 12 months, the company had $3.7 billion in revenue. Over the last 12 months, the net income was $350 million, and the cash from operations also over the last 12 months was $353 million. The operating margins for 2018 are tracking to be 16.5%, and for 2019, the margins are expected to increase slightly to 17.0%. On to the valuation metrics. The trailing PE ratio is at 14.5, and the forward PE ratio is at 11.5, and that means that our earnings are expected to increase. The PEG ratio is at 1.2. The price to sales ratio is at 1.3. The price to book ratio is 2.9. And the enterprise value to EBITDA ratio is at 9.3. The company pays a modest dividend. The dividend yield is 0.4%, and the average dividend payout ratio over the last 3 years was 6%. On the price chart for Acuity Brands, the stock has been modestly volatile over the past year. A year ago, the stock was about $160, and now it's around $125. The next slide is called Looking Back and Looking Forward. The stock advanced during the third quarter of 2018 as a result of stronger than expected sales and net income. The company experienced a strong increase in its contractor-focused portfolio of products that encouraged the purchase of a bundle of its products. The company acquired IoTA Engineering, which is expanding its wireless LED smart lighting applications, particularly in the emergency lighting market. Looking forward, there are concerns over the impact of the downward turn in demand for large-scale lighting projects. The company is experiencing increases in input costs and labor shortages, and the company is inexpensive on a valuation basis and looks to be an attractive investment with nice upside potential. The next slide is called the Why Now, the Bull Rationale. The reasons why we're optimistic on the upside are short and few. Increasing sales and revenue per share over the next 12 months. And the valuation metrics right now are low based on historical levels. And in the near future, it's expected to be lower against historical levels, which we think will put pressure on the stock to increase. On to the summary slide. Financial statement quality of Acuity Brands is excellent. They have a very strong balance sheet. The net profit trend is improving. The price pattern trend, it has declined, but we expect that to turn around. The industry outlook is positive. Our overall market outlook is also positive. GDP is still expected to be quite attractive and positive over the next 6 months. So the recent closing price for Acuity Brands was $123.64. Our 6-month price target We can see it getting up to $200, giving this stock a 6-month upside potential of greater than 50%. So it's for all these reasons that we believe that Acuity Brands is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Connor Management Group. Connor Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.